Would you trust a car dealer to plan your retirement?
Probably not. Well, that's what you might want to ask yourself before hiring a financial advisor.
And joining us now with tips on choosing someone to handle your money is fiduciary investor James Virgilio. He's here, and we really thank you so much for coming in with all this valuable information.
Well, thanks for having me.
So tell us, what should we look out for with a financial advisor when hiring one?
Well, you want to make sure they're a fiduciary, and unfortunately only 1 in 10 financial advisors are. So it's more difficult than you might imagine finding one who actually is going to represent your best interest all the time.
What's the difference, and how do you find one that is?
Well, the difference is almost everyone, the 9 out of 10, are salespeople, and they're going to represent items that may be good for you but don't have to be best for you. Whereas a fiduciary will always do what's in your best interest. It's tricky to figure this out. A simple way, though, to know is anyone that's with a bank or a brokerage firm like a Merrill Lynch or a Northwestern Mutual cannot be your fiduciary. So you can start there and then begin to scale down looking at websites, asking questions. But really, ask your financial advisor, are you my fiduciary all the time?
And they have to be honest, obviously.
They must be honest with that.
Okay.
Yes.
And you have a lot of tips for investing money, and you say, you know, a 401k really is the best for anyone earning $40,000 plus. And as hard as it is to save, when it comes to the tax benefits, you just can't beat it.
You can't beat it, and what's surprising is most people assume that a Roth account, especially if you're younger, is best for you. That's actually not the case. It entirely has to do with how much money you make. So if you're single and you make more than $40,000, choose a 401k, a regular or traditional 401k. If you're married and make more than $80,000, choose a traditional 401k regardless of your age. There are reasons Roths are good, but it's widely misunderstood that Roths are the best.
Yeah, why do you say that? Because I mean, I've heard that a Roth's better.
Well, the problem is it's a complicated math answer, but really it has to do with 2 different tax types. Your marginal bracket, which is what you're making at your top level, and your effective tax rate, which is what you actually get taxed at. Without getting too far into the weeds, the regular 401k is better if you look at even a variety of changing tax circumstances. Even if taxes increase, it's highly likely that the traditional 401k is still better for you.
Now, when you start earning, a solid wage, a lot of folks want to run out and buy a home. And we live in the Tampa Bay area, which is now in the top 10 places to invest in property, but you say it's better to rent. It's
better to rent, and that's another confusing one. On average, your home that you live in will lose you almost 12% a year when you factor in your mortgage, your cost, your upkeep. Now, of course, I grew up in Miami and Sarasota, so I'm familiar with Florida real estate. But if you're looking at national averages and you look at trends, buying a home is not a good investment. I'm not the only one who says this. If you talk to the real estate professor at Harvard or Stanford or Yale, they'll tell you the same thing. It's a significant myth.
Even with the borrowing rate so low right now, I mean, we're at 3% for like a 30-year fix, which is pretty good, way to leverage your money.
It would be, except you never want to borrow money to buy an asset that won't make you money. And unfortunately, homes are not going to make you money on average. Typically, there are exceptions to every rule, but on average, you're borrowing money for something that will not make you money.
Awesome. Some really great information.
Yeah, thank you so much.
Well, thanks, Rob.
All right, let's turn things over to Lisa.